This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pashradis. Thanks for joining us at XM.com. Equity markets were in a surprisingly chirpy mood on Monday, with little sign of distress ahead of what is expected to be the worst earnings season in at least 12 years. Banks will be the primary focus this week, with Citigroup, JP Morgan, and Wells Fargo kicking things off on Tuesday. There's no doubt that this earnings season will bring plenty of surprises, good and bad, as the bar has been set very low for revenue expectations. Earnings for S&P 500 companies are estimated to have slumped by about 44% in the second quarter, and given the impressive pace at which consumption bounced back in the United States and elsewhere after the lockdowns were eased in May, many firms will have an easy job in beating the gloomy forecasts. And this is what most traders appear to be betting on, with U.S. stock futures gaining around 0.6% in European trading, having sharply reversed higher on Friday. In the currency markets, major pairs were also being driven by the mildly risk-on trades, even as the virus flare-ups in the U.S., Australia, and Japan show no sign of subsiding. The underlying assumption is that the abundance of liquidity in business reopenings will be enough to keep the recovery intact until a vaccine for COVID-19 becomes available. Investors have pinned their hopes on a vaccine by early 2021, even though many medical experts warn that that may be too optimistic. But that's a worry for another day as far as markets are concerned, and the safe haven US dollar continued to drift lower against a basket of currencies on Monday. The dollar's losses come despite a strong rebound in U.S. Treasury yields following Friday's dip, as well as growing trade tensions between Washington and the European Union after the Trump administration slapped 25% tariffs on $1.3 billion of French goods in a spat over France's plan for a digital tax. There was little reaction in the euro either to the tariff news, though the single currency was struggling to hold on to the $1.13 level today after a strong performance last week. Gold, however, headed sharply higher, gaining 0.5%, basking in the uncertainty and as investors gear up for a potentially volatile second half of July. This was today's Daily Market Comment. Thanks for joining us at XM.com.